I think most of the property casualty insurance companies came through the financial crisis in good shape because they kept to the basic insurance business model that they've been following for many years. And this business model basically meant there was virtually no leverage. They didn't borrow money to engage in their activities, which is what many of the banks did and one of the reasons they got in trouble. They tried to keep pricing consistent with the risk that they assumed, which was, again, a departure the banks made, but the insurers did not. And they kept so-called skin in the game. They didn't reinsure everything, but they kept responsibility for each risk that they assumed. And so they felt strongly that they had to underwrite carefully, and as a result of those three things, managed to survive the financial crisis in good shape. The difficulty of growing and maintaining profitability in a stagnant market is that each of those things is kind of opposite to the other. In order to grow, they're going to have to take market share from some other insurance company because exposure growth is not going to be present in a stagnant economy. If they take exposure from another carrier, they're going to have to underprice it, and that undermines their profitability. So the twin goals of growing and being profitable are against each other, and that makes it very difficult for property and casualty companies to do both in this stagnant economy. I would think that they would concentrate on profitability, on underwriting just the risks that they can successfully, profitably write, but that may be sacrificing growth in the near term. The key megatrends that property casualty insurance companies are going to look at and deal with in the next couple of years are a little hard to forecast because things are so unlike what they've been in the last couple of decades. Certainly the change in insurance regulation is going to be something that they'll have to contend with, although it's not clear at this point exactly how that will work itself out. But it's quite possible there will be new layers of regulation, certainly at the federal level on top of state regulation, and that will be, I think, a challenge for especially the large insurance companies. Another trend, it appears as though the tort menace is resurfacing, hopefully not as bad as it was in the 80s, but when the tort juggernaut begins, that tends to be very expensive for liability insurance companies. So that's a mega trend that bears watching. And many are worried about the impact of inflation. Even though the economy has a lot of slack in it, the inflation that insurance companies face in terms of the claims they pay seems to be on a different track and perhaps more severe than what the general population experiences. So I would say those are trends that will have its effect on the property casualty industry in the next couple of years.